Welcome to the FI Investors Podcast, helping you achieve financial independence through real estate investing, one episode at a time. We talk about personal finance, mindset, and real estate investing. Whether you're a rookie or looking to scale your portfolio, we're here to provide you with the tactics and actionable steps to achieve your goals. Here are your hosts, Diego Corzo and Ward Mahoney.
Okay, what's up, Diego?
Welcome to another FFF Financial Freedom Fridays with the FI Investors Podcast. I am here with Ward. How are you, man?
What's up, brother? I'm doing well. So before we jump into it, I want to share a story, right? So I've got 7 doors across 4 properties in 3 different states.
Yes.
And now I'm trying to really look at like leveling up, right? So one of the things that I've been focusing on last week is trying to run numbers for an all cash offer, which would be raised or it would be given to me by a hard money lender for a property at a 60% discount. Right? And that's a quadplex. It's where my current triplex is. So it just shows when you don't have access to money, if you're not fully bankable, there are ways to get the deal done. And if you have a really good deal, you can go forward with an offer and see if it happens. It's a numbers game.
It is.
So
it is. And people shouldn't. I feel like if people have that opportunity, right, to if they know that it is a numbers game, they just need to have those conversations.
Absolutely.
To be able to find those off-market deals too, because I believe that one's off-market, right?
Yes, it was. But that was brought to us by a realtor / wholesaler, right? So super, super important for everybody to build those relationships as well. Exactly.
And that's really good because one of the things too that we're going to be doing on this episode is it's going to be on questions that one can ask a sponsor for a syndication if they're looking to partner up with somebody to make an investment. Right? Now with you, for example, it can also be like how to partner, but these questions are going to be more on the syndication side.
Cool. But these conversations are super important to have with both a JV partner and a syndication partner.
Exactly.
The big difference is, though, if you are going into business with a syndicator, you have to make sure their track record is bulletproof because anyone that's a good syndicator can look at a pro forma and make a killer story about it, even if it's a terrible deal.
Exactly.
Make sure that the track record is bulletproof. Talk to other LPs that they've worked with.
Yes.
And really go a mile deep in your research.
Yes. And before I get on that, one of the things that I do want to mention with what you just shared, though, is that a lot of people would say right now is like, no, I don't have cash right now. The market is too hot, depending on where you are. But you were able to connect with the right team, basically the wholesaler, that investor-friendly realtor that will get you deals like that. Right. And that is important because a lot of people would say, no, I'm not ready right now.
Right.
But even though you may not have the cash right now, you're still looking for deals and seeing how you can make it work.
100%.
Yes. And one of the things too is that this is something that a lot of people usually, as we're getting into November, December, they say, hey, I'm just going to wait until next year. But it's super important to don't pull off the gas off the metal or whatever. What's that?
That's not it.
What is it?
don't pull your... That's
I don't remember.
It's something along the lines of don't take your foot off the gas.
That one.
I don't think that's a saying. I think that's just...
but take the pedal to the metal or whatever.
There we go.
Continue taking action. Yes. At least English. English is my second language, guys. So that was
That's funny.
All right. So a couple of weeks ago, though, I was at a deal analysis class put together by GoBundance. And I learned a couple of things. So I learned a couple of things because I had lost money in some deals that I did not do 100% due diligence yet, because I didn't know at the moment like what are the best questions to ask.
Yeah.
And I did lose some money, but now moving forward, right? When I lose money, I see it as a lesson. Like I took a class. This one was an expensive class, but that is totally fine. And here are the questions that I will be asking a syndicator in the future if they're raising money.
Yeah. And I want to just point on one thing too, right? Because I get from a lot of rookies, right? They say, oh, I want to go buy a deal, but the syndicator's offering me an 8% pref and it's going to be no work. How much? You said you've lost money on a few deals. How many of those?
On one deal. On one deal, one syndication.
On a syndication. That's what I was getting after.
Yeah.
How many deals have you lost money on, either your own deal or a JV deal?
My own deal, none.
Boom.
Yeah.
So just because someone's offering you this crazy 8 pref and you don't have to do anything other than wire him the money, it does not mean that you're actually going to hit that 8 pref. Let's hear the questions.
Exactly. No, and that's really important because sometimes when you're not fudging the numbers, but like you can make, as you mentioned earlier, right? You can say, well, we're going to charge less here, but we will charge more later. There's some fees also that are involved, right? And I think that it's really important. So here are the questions that I will be asking a sponsor in the future. A sponsor is basically the person that's raising the money, that's part of the general partners. And they're raising money from limited partners, which basically say that they don't have much of a vote on the day-to-day of that syndication. Right? So imagine it's a property that's 100 doors and they're needing to raise a certain amount of money. They get it from LPs, limited partners. So if they come to me and they're like, Diego, we are looking to raise, I would say 100,000. We have, this is a pro forma, blah, blah, blah. These are the questions I'm going to ask. Number one, where do you see the risk in this deal? Where do you see the risk in this deal? Number two, who is the lead investor? Number three, can I pull a background check and what would I find? Number four, what keeps you up at night? Number five, are you putting money in the deal? And if you are, what source? And number six, have you ever lost capital? And if you did, what did you do? Right? So we're going to go back to them. But those are the 6 questions that I would be asking that basically so it asks about the deal. It asks about who are the other investors. It asks about the background of that person. Of the GP. And it also asks them how, like, their potential of their own investment in the deal and from their background to if they lost money.
Right.
And I think that is basically gets to, you can find out if it's a well-rounded sponsor.
Totally.
Right? So with that said, where do you see the risk in the deal? This is important because this is where that person might say, you know what, the risk is that there's a lot of places that need rehab. One of them might be, look, the risk is that there's an insurance claim that we have to do. And we hope that they give us X amount of money instead of this. Worst case scenario is this, best case scenario is that, but that's what we're going for.
Cool.
Another one can be that, and another risk can be that there's like 2 other multifamilies in that same area that they're being competition right now. Right. So you want to make sure that you're asking those questions. Totally. That lead investor, it's a good one because you can see, you can ask and see who is the main person that's putting in a lot of the money, and you can ask too is like depending on who that person is, you can know, okay, well, it's a family office. Well, they might have people that are actually underwriting these deals. That's all that they do. And if they give the thumbs up, okay, that's a good sign. Let me continue doing my due diligence as well. Right. Can I pull a background check and what will I find? This is really good because if they say, hey, no, like, I don't think it's necessary for you to pull my background, or like, why do you want to do that? Don't you trust me? Stuff like that. They might have something to hide. And if they are transparent with you, they might say, look, 20 years ago, I got a DUI, or this happened, or maybe something, right? Like, it doesn't matter, but you want to make sure that they are transparent.
Yes, 100%.
The what keeps you up at night, I think it's a really good question because you get to hear, maybe it's like, dude, what keeps me up at night is that we ran the pro formas very well, but if rehab costs, if something happens and prices double on this part, that's something that will keep me up at night.
Yeah.
But these are the things that I'm doing to make sure that we cover our loss in various ways.
Yep.
Are you putting money in the deal? And what source? The source is important.
It's really
because
good.
some people, as you know, in a syndication, there's always that like asset management fee. There's that acquisition fee, and sometimes
sales fee.
Exactly. And sometimes they will take those fees and leave them in the deal, and they say, "Oh yes, I'm investing my money in the deal." It's like, yeah, but it's money that you earn. It's not really money out of your pocket.
Right.
Mm-hmm. And that's why you want to ask what source, because then it'll be like, oh, it's money that's coming from my bank account, or you might be like, well, I'm leaving my acquisition fee as part of the deal.
Yeah.
And I would prefer to invest in deals where the main sponsors are putting in their own money too,
Right.
because they can really tell that this is going to be a good deal, and they want to be part of not just the day-to-day, but also as an LP.
100%.
Mm-hmm.
Those are great.
Yeah, and then the other one, the loss of capital. Like, what did you do? Did you pay the people back maybe months later, or you did whatever you need to do? And maybe they'll be like, look, I lost all my money. I didn't take any from that deal. So I basically didn't get paid for my own time. I didn't do this, but I wanted to do what's right for the investors.
Yeah.
Or did they say, oh, yes, I lost capital, and like, look, I made a huge mistake, and but F that, I just like declare bankruptcy to get it out of the way, and now I'm starting again. Like, it depends what they do when like crap hits the fan, right?
Yeah.
From that perspective.
That's great. And I would say those questions are only phase one.
Mm-hmm.
Phase two is going to be actually to reach out and talk to LPs and say, ask the same questions to them and be like, what was it like working with this person? Would you do it again, etc.
Exactly.
Yeah.
Exactly. I think it's really important because you can ask them too, like, who are other investors that you've worked with in the past that I can get not a review, but that I can
more or less
that I can get like a testimonial on or somebody, because I feel like if I would have asked these in the past, I would not have invested in the deal that went south. And then the other thing is, I would, whenever I get these deals, asking your board of advisors, right?
Ooh.
Like I should have taken this to some people that I know, and I didn't, because I feel like I didn't want to waste their time, but I totally should have, because when I told them what happened, they were like, oh, dude, I would have told you to not invest in that deal.
Yeah, exactly. So, wow, this is really good. And the other thing I want to say too, right? If you do end up going to one of these deals, understand that they're far more complicated, and they rely on, I don't want to say that, but they're far more complicated than doing your average house hack. Mm-hmm. The reason is there's more money involved. The debt is structured very, very differently. And it's just, you have a lot more tenants. There's a lot more moving pieces, right? Insurance costs a lot more. And there are a lot of things right now, especially in this market, that have messed up a lot of syndications, right? There are a lot of people in a lot of different syndications right now in this market with higher interest rates. Insurance rates have gone up. That wasn't anticipated. And usually when you're going into a syndication, they say you'll get your money back in 3 to 5 years. They're basing that off of a refinance. But what you need to have happen for a refinance to actually work is for interest rates to remain where they're at or go down.
If they're, depending on how they ran their numbers.
Correct.
Because if they didn't see that, how crazy the interest rates were going to be, it is not going to be good.
And that's exactly my point. Because if you do that and you plan on having your money coming back to you, you expect that $50K that you invested 4 years ago to come back to you today. It's not going to, because interest rates are at 7%. And that's something that nobody could have predicted. So the pro forma could have been absolutely perfect. Everything could have been perfect to a T, and yet you still end up completely hosed because of interest rates. And that falls down on that is the risk that the GP is taking.
Exactly.
And the LP, but
yes, it's a risk overall, but you want to make sure that you're underwriting the deals the right way.
Yeah.
For example, if they're underwriting the deals with like a 15% rent increase year over year, you're like, dude, that's not happening
realistic
anymore.
Yeah.
Right. Or even 10. I would say run it at like 3 to 5% max. Just because of how the numbers are right now, like how the economy is and all that stuff.
Yeah.
So,
And I think the other thing too is like the best way to get into a good syndication is actually being able to identify good opportunities on your own. Mm-hmm. Right. So if you've bought 2 or 3 properties on your own, if you've done the house hacking route, then I would say it might be time to look into syndications. Mm-hmm. But I would be really, really skeptical going into a syndication without having been through just building my portfolio to where I've gotten it.
Yeah, because you want to make sure that you're understanding the numbers, so that they're not just telling you certain things. You want to make sure that you can underwrite the deals the right way.
Right, and you can have sophisticated conversations, right? Mm-hmm. And you can kind of talk the talk, walk the walk. Because if you can't, it's going to be like bringing your car to an auto mechanic.
Yes.
They're going to charge you $500 and you're going to have no idea what they did.
Exactly. No, that's true. So, so that was the FFF for today. Huge shout out to all of the guys that went to this event from GoBundance. We spent a day and a half analyzing, doing deal analysis. Yeah. And there's a lot more notes that we're going to share in the future on this, but we'll save it for another FFF.
I love it. Well, sounds good. We'll see you then, Diego.
Peace out. See you soon.
Thank you for listening to the FI Investors Podcast. Make sure you subscribe so you don't miss any future episodes. And share this with a fellow real estate investor who you think would find value in what we do. Until next time.